traditional owners of the land on which we meet today, the peoples of the Kulin Nation. I also pay my respects to the elders past and present. It's very exciting to be here today talking PROPTECH at Intersekt. So I'd like to introduce Lara Paholski, CEO of the lawstore.com.au, a law tech which has developed a solution called LiveSign. LiveSign biometrically binds a person to their signature at the precise point of signing a digital document. Lara has been in tech since 2014 when she co-founded a national digital verification tech startup, which was later acquired by a large scale-up legal tech company. Then I have Mark McDuffie, co-founder and managing director of Downsizer, an innovative digital platform for homeowners with equity to purchase a new property off the plan with no cash deposit. He's Downsizer is 2022 PropTech to watch at the Australian PropTech Association Awards, and Mark comes from a banking background with almost 30 years experience in international wealth management, institutional banking, and markets industry. And Dean Fraser, founder and CEO of Brickfloor, a PropTech empowering home ownership for Australians through a market price guarantee. Brickfloor was named the most innovative PropTech of the year in 2021 and 2022 at the Australia PropTech Association Awards. So I'll pass it over to you so you can talk a little bit about your solution. And I think the biggest question is PropTech or FinTech? Lara, would you like to talk about LiveSign?
Sure. I'll start off by saying that with LiveSign what we do is we actually tell you who is behind the device at the precise point of signing any digital document. And we do that by biometrically binding the person behind the device to their government-issued ID at the exact time that they're signing a document, so that you can know with certainty who's actually signing that, and we're not compromising on security. And it's what really commonly we refer to as Know Your Signer.
Very good. And Downsizer?
Downsizer is a unique blend of digital technology and a financial instrument. So depending on which day of the week and which conference you're at, you're in InsurTech, PropTech, FinTech. As far as we're concerned, we are a FinTech in a real estate sector. We allow homeowners with proven net equity in their current dwelling to buy their next property with zero cash deposit because they've got fully backed assets.
Very good. And Brickfloor?
Brickfloor is a property technology and funds management business. So we basically alleviate the stress around selling your home through a core product called a market price guarantee. Effectively, it's a market price on your home before you list for sale. We're also looking to broaden that concept through combining it with a home loan product. So it'll enable you to buy before you've sold with confidence. So we're creating a new sort of category of loan through our core product of a market price guarantee. And we end up buying homes by virtue of our market price guarantee. So we're building out a property fund or a portfolio of great Aussie homes that we're looking to now open up to young Australians as a home deposit saving mechanism where they can tap into the market and get on the property ladder in 9 minutes, not 9 years, through access to our property fund. So there's a few different moving parts to the business, but really about providing certainty to home sellers and helping people buy before they've sold, and also helping people save in a better format, we think, for their first home deposit.
So on the topic of PropTech or FinTech, what are your thoughts? Lara?
Very
bit of both?
bit of both, and we probably cross over a lot of both in that we're servicing a lot of the property-based institutions and companies as well as financial, but we're really operating at the intersect, I would say, of both.
Mark?
Yeah, as I said, we're kind of agnostic to the label, but we're a financial instrument. We started with a financial instrument that basically has to mitigate and transfer the risk that it underpins our product, and then we built the digital technology and distribution on top of it. So, as I said, we would say we're InsurTech or FinTech in a property or real estate space. Our business model, if I know that Paola has a $3 million house currently and is buying a $1 million apartment, but she wholly owns the $3 million apartment or house, she's clearly got enough equity to buy the future one. But we then, if we know exactly when Paola's property is completing, we know that her net equity is available. So then it turns into this adjacent opportunity of wealth management, financial services, insurance products. So there's a whole raft of opportunities after what we call that initial product is a lifestyle change. So our mission, for example, is to help an entire generation stop worrying and start living, because we see that initial property sale for people that are downsizing their home as a lifestyle gateway. So there's a bundle of products that could come after it that would be insurance, financial services from the PROPTECH.
Yeah, and assuming that applies to brick floor as well.
Yeah, exactly. Like I try not to get too caught up on PROPTECH or FinTech personally. I think there's a huge amount of overlap there. Like we're all trying to remove friction, provide sort of confidence and certainty in the market, and do things at speed. And that's certainly, I think, what we're all looking to do here. And it's just that we've got a sort of a property lens focus as opposed to maybe sort of a money focus, if you like. So there's a lot of overlaps there. But and we probably used to position ourselves a little bit more as a PropTech, but then and we still do, but as we've sort of expanded our product set, we can see, like Mark, like there's a lot of financial product style opportunities that come of our sort of core product, whether it's the property fund opening up to millennials, or whether it's combining with a home loan. Like we're sort of moving into that space, but we kind of felt like we're probably already in that space anyway, but we're sort of labelling ourselves as PropTech. So yeah, pretty. I think they're reasonably synonymous. Probably 90% of the time, like if you're a PropTech, you probably are pretty much. You've got some overlaps with the financial system, and you are almost a FinTech as well.
Yeah, absolutely, and all in the space of enabling the transaction. So I just have a question specific to you, Lara. I've been in the PropTech space for quite some time, and what amazes me the most is the fact that a lot of the technologies that are empowering real estate in many different aspects, be it transaction, or if it's planning, construction, design. All of that seems to happen outside the walls of the larger organizations, the real estate giants. And I wanted to understand from your side, Lara, as there is that convergence of PropTech, FinTech, and InsurTech in pretty much all the products that you're talking to us about here today. From a legal perspective, what is the impact from a legal tech perspective of LiveSign in actually removing the friction in real estate transactions?
I might start off, Paula, by just going back a little bit in terms of real estate transactions. And if we think of all of the legal documents that we need to sign throughout a transaction, and as we're doing that, typically in the paper-based world, which actually wasn't so long ago, people would be signing those documents in a real world with someone there witnessing who was actually signing them, and generally looking at the ID documents at the same time. So we actually knew who we were dealing with throughout the entirety of that transaction. And it came, of course, with a whole lot of friction. It wasn't terribly convenient. People were going down to the post office or having to go into their real estate or lawyer's office to sign transactions, and it was really clunky. But it did absolutely come with that certainty. In the rush to digital, what's actually happened is, whilst we're transacting conveniently and it's online and we can do that pretty much 24/7, the witnessing component and the certainty that actually came with that has been lost along the way. So again, if we think of all and they're great technologies, the signing technologies that exist out there at the moment, they go from keyboard to keyboard. They don't actually extend beyond the keyboard. And that's where LiveSign comes in, and that's where we actually saw a gap in the market. And we wanted to bring to the market and the participants within the market certainty of them knowing who's actually signing those high-value legal documents at the precise point of signing them, so that they could transact safely in the online world. And we do that, as I mentioned before, by biometrically binding the person behind the device at the precise point that they're signing those documents, by matching them against their facial, or the biometrics of their face against their government-issued ID. So we're really removing a lot of, the friction that was was there previously has actually been removed, and we're enabling people to now transact online in a safe and secure way, know who they're dealing with throughout that transaction. And I think, you know, a lot of those basic legal principles actually got lost along the way, as I said, in the rush to digital. Everyone's been quite caught up in that, but hopefully we're bringing a lot of those basic legal principles back in and enabling people to transact safely and securely in the online world.
Thank you. And now a question to Dean. Property ownership is a very relatable topic and one we end up hearing about on a daily basis from personal conversations or in the news or just about market predictions. How does brick floor fit into the current economic environment?
Yeah, good question. So obviously the current economic environment involves rising interest rates and I guess uncertainty with asset prices all around the world, whether it's the share market or the property market. There's volatility and there's a lack of certainty really in terms of what your home is currently worth or what your shares are currently worth, and we've seen a lot of pressure on the share market, and we've started to see pressure on the real estate sector as well in terms of prices softening across most states in Australia. So with our core product, the market price guarantee, it's all about providing certainty to the home seller. So volatility in a way is our friend for our product because we provide absolute sales certainty for a home seller's sale process, i.e. a market offer before they've listed for sale, and they can then take the home to market, try to get a higher price. If they can't, we step in and we buy it. If they can get a higher price, they're free to sell to that third party. So in the current environment, we think is really sort of conducive to us sort of, really accelerating and growing our business. It does come with it some risk, obviously, if we're then buying homes into a property fund that we're looking to effectively institutionalise residential properties and asset class. You need to have investors for that property fund that are long-term patient investors who like resi and thinking sort of medium to long-term as opposed to where's the market going to be in the next couple of years, which is obviously a short-term thinking approach. So the certainty aspect of our product is we feel really valuable in this type of market. Also, if you're looking to buy your next place, like what we discovered in being in market was that basically 90% of the population in Australia would prefer to buy the next home first before they've sold their current one, if it's safe to do so. But the problem with in the market at the moment is if you're buying first, you're really taking a lot of risk often because you don't know if your current home is going to sell within the right time frame and for the right price. And so we lock in that sale price for the current home, enabling that person to safely buy before they've sold. So in a softening market, people still prefer to buy first because they want to know where they're going before they've sold. It's a bit like, I think when you sell first, it's a bit like if you've got kids and you're taking them out of school to go to a new school before you've actually found that new school and signed up and spoken to the principal. It's a bit crazy to be selling first or taking your kids out of school before you know where they're going to. You should go and talk to the next principal and say, hey, I want to come across, my kid's fine to come across. Agree that, and then look to take your kids out. So you should buy first, in my view, and do it safely, and then sell your next place. But the problem is when you do buy first, often it's not safe because you don't know what you're going to get for your current home. So anyway, in a weaker market, the desire to buy first is still there because people want to buy and sell and transact in the same market cycle, generally speaking. But there's a whole lot more risk around that sales side. So again, with one of the products we're looking to launch with a major lender, it will combine our sale guarantee, market price guarantee, with a home loan so that you can actually safely buy first, meeting that 90% of the market sort of desire to buy first. And then I guess one other sort of related point is in the current environment, like as you sort of all know, if you're filling up your car for petrol or you're buying groceries, like the cost of living has just skyrocketed. I think I filled a basic car up the other day for $180, which was ridiculous. I couldn't believe it. So everything is costing us a whole lot more. So we're trying to build out of our property fund effectively an investment app that will tap into that fund to let millennials save faster for their first home deposit. And so that whole savings journey has become, I think, a whole lot more important. It's always been important, but particularly when you really are struggling to save, even as an adult, it's hard to save your pennies when you've got a young family, for example. So anything that you can do to help people save and get into their final dream asset purchase, whether it's a car or a home or travel or whatever they want to do with it. We think that's really important in the current environment to really sort of help people save and get into their next place.
Absolutely. And I've known Mark for a couple of years now, and I've been always, fascinated by the idea of downsizer. And I've recently watched an interview where you, Mark, mentioned that Australia has $1.7 trillion of long-held residential stock that could be released into the market in the next 5 years. What is the role that downsizer plays in enabling these transactions?
Yeah, thank you. We have fantastic data that basically outlines as you're saying, a large shift in the age 60 and above looking to release long-held residential property stock. There is actually a tax incentive for downsizers downsizing their primary dwelling. They can put $300,000 of additional super into their super fund from a downsized transaction. That's $600,000 per couple. The government has reduced that to age 60, so that's increased our market for asset-rich, cash-poor homeowners looking to buy their next property and simplify their lives. Basically how our product works is that we qualify the net equity position of the buyer, and we connect them on the other side of the marketplace with property developers looking to sell. And we've talked a little bit about the macroeconomic trends here at the moment. We see our asset-rich, cash-poor homeowners and we're educating them on the fact that they have buying power. Because for every mortgage that's approved to buy off the plan, the banks get the right to revalidate mortgage affordability 90 days from settlement. If the interest rates and inflation continue to rise, our prediction is that the affordability of mortgages will be 20 to 25% impacted, meaning there's less qualified buyers in the market. Our buyers can come onto our platform, and depending on what state they're in, state being the state of domicile. So if they're in New South Wales, for example, and they wholly own their asset, we can allow them to buy off the plan within an hour. Right, so if they have all their information real time, there's no mortgage approval because guess what? They wholly own the property they own, and it needs to be at least equal to more than the price they want to buy. So if I've got a $2 million house that I wholly own and I want to buy a $1 million unit, why should I have to find a $100,000 deposit to put in a low interest escrow account? Just to hammer that home, I'll tell you about one of our last sales, which is really humbling for us as a new startup. 79-year-old guy, lived in his house for 30 years. The utility bills are the highest he can ever remember because cost of living's going up. He has almost no source of income because his superannuation is low. His house he can't take care of and maintain. His garden is shoulder height, in his words. And he has a line of credit from a bank that he's had for more than 15 years that's at its limit. That's accruing interest on a daily basis that he cannot afford. But he's landlocked. He can't. So he walked into one of our partner clients and he bought off the plan for a $600,000 apartment near a new hospital, near new amenities. He doesn't have to put the deposit down because we qualify that he has a house worth $1 million. So why should someone like that have to try and find a deposit and put it in a low interest account when they're actually fully asset backed? So we basically digitize that whole process with 14 APIs and make it real time if all of your qualification points are there. So we're streamlining that process end to end.
And most importantly, you're enabling for their property to go back into the market for...
Yeah, that's completely true. So we help them sell their current asset to align with the purchase or settlement of the off-the-plan. That releases that equity. So for every downsizer, there's an upsizer waiting to get onto that market. So if we release more stock, and government initiative yesterday announced or confirmed that there was 8,000 people downsized and took advantage of the government's tax incentive. That's 8,000 long-held properties that have been released that make it more accessible to those all the way cascading through to first-time homeowners. So the more we release and recycle, the more the market should be stabilized.
That's amazing. Just about the size of the market, we just talked briefly, what that looks like for downsizer in Australia, for example. But I have a Deloitte report here that says that with nearly $9 trillion in global assets, commercial real estate as something else is larger than any other class of financial services assets. However, what we see is, so not just considering residential real estate, but also in commercial real estate, we find that in real estate, adoption is an issue. How do you see your business overcoming that in the residential space?
So we're working in the biggest barrier for us is actually the incumbent construction lending banks adopting this new bond instrument and technology because they've just never seen it before. But we are demonstrating that there is market pull. We are only advertising in 18 suburbs, but we have demand now in 700 suburbs across Australia saying that I'm a downsizer and I live here and I want to live there. So to me, consumer pressure, in our opinion, will drive that through and change the construction lending conversation that we have. But it's more about adoption and just understanding and education.
Yeah, and for you, Lara, for LifeSign, is there an adoption hurdle that you need to overcome?
Very much so for us, Paula, and I would say that's part of the journey that we're on, which is actually for us very much an educational journey at the moment, in that most people that we're dealing with or companies seem very comfortable to be or sending out to their clients documents to be executed in the online world without actually knowing precisely and resolutely who actually signed that document. So for us, there's an education piece to help the market or the participants in the market actually understand the inherent risks that come with that, and not knowing. Whilst it all existed and worked really well in the paper world, there's inherent risk with not knowing who that is in the digital world, and that's where we can help. And for us, it's about shifting that mindset to get people to think beyond the keyboard of who's actually signing those documents.
Yeah, and it seems that disruptive technologies always have a role to play in the fact that you need to educate people into adoption, and I'm assuming that is the same for you, Dean?
Yeah, definitely. Like, we had some interesting experiences when we were trying to find out sort of, channel market fit. Like, I think people talk about product market fit a lot, but I kind of see it like you've got to have the right product, of course, but you've got to have the right channel for that product. You've got to have the right positioning and marketing for that channel, for that product. And so you need a bit of luck market fit and a bit of timing market fit. You need all this fit to kind of happen at the same time. So it's not just having the right, because you might have the perfect product, but if it's not positioned the right way for the right channel at the right time, the right place, et cetera, it doesn't quite gel. So, but we found, for example, with real estate agents, when we first went out to market, we were pushing out through real estate agents, saying to them, look, we can guarantee, for our market price guarantee product, we can guarantee a sale for your home seller customer. So if you've got a customer sitting on the fence as to whether they want to sell or not, you can actually get them over the line through saying, hey, there's no downside risk here. You're going to get this minimum price, floor price, or more. But the adoption was tricky because those particular agents that we're dealing with, and I think probably it's a generalisation, but it's reasonably typical, they want to promote themselves when they're trying to win a listing, and they want to say how they've got the most market share in the market, and that all you really need is me as the agent to help you sell that home. So to introduce a side product that is important and can help them win a listing was initially difficult, particularly for the younger agent who he or she wasn't, I guess, as equipped to say how a product like brick floor could fit into the sale journey, whereas the more senior agent was able to say, look, we're the best agents in the market, we have all the market share, but as a professional, we like to have a plan B scenario, and the plan B is brick floor, guaranteed sale outcome. We can leverage that price to get a higher price in the market is the game plan. But it was certainly sort of hard, because in the end, the adoption was a bit tricky through the agents, because even though we had big engagement from the chairmen and women from big agencies in Melbourne in particular, when it came down to the junior agent or the listing agent or sales agent who might be in their 20s, for them to kind of explain how the product was fitting into the sales journey was a bit harder, and they're a little bit, with respect, a little bit sort of blinkered in how they would pitch their own skill set to the market. So we had to sort of think about other ways and other channels, mortgage brokers and the like, and going direct to the customer as well to try to get that adoption, and still even going direct to customers. We found, you get the early adopters who are creative in their thinking and open to trying new things, and then would get other customers that would never going to become a customer until maybe in a few years' time, but who were sort of more fixed mindset, but were sort of intrigued about what we did. But to adopt, to get the right customer and find that right customer, that was an initial challenge because they were the ones that were more likely, the more innovative customers were more likely to take out our product. So certainly, I think with any new business, FinTech, PropTech, any type of tech, there is a big sort of adoption, trust and credibility issue. We also confronted that too. There a lot of questions like how do you guarantee a price? Like that's not possible. Well, we end up buying the home. Oh, okay, so you offer a sort of lowball price for our home. No, we offer a market price. It's a fair reserve price. But there was a lot of distrust, so we had to sort of try to deal with that as well. And I think a lot of things like what we're doing now and applying for awards, we'd never done that before until a couple of years ago, and then we were lucky enough to win a few. And that for us gave us a lot of credibility too, because we'd put up the little logos on the website and also on our email sign-offs, and people would go, oh, okay, well maybe they are, kind of legit with what they do. And so, but certainly, we're still going through the adoption curve and, working out ways to improve it. But I think for us, it's like finding, relevant partners in whether they're a lender or a mortgage broker or a real estate agent or portal who have that credibility already, and for us then to sort of partner with them while at the same time we sort of go direct to the customer. But having a trusted partner really helps, I think, accelerate that adoption.
Yeah, absolutely. I have one more question, but we're running out of time. Just wondering if there's anyone that has a question. Oh, yes, we've got one question. Yep.
This one's for Mark. First of all, love the product. I'm definitely going to introduce it to my parents. They need it.
Yeah, send them my way.
I was just wondering, this is a question around mitigating risk. So I tried to buy off the plan a couple of months ago. As a first home buyer, I lost half of my deposit, which was really sad for me. It was just because the developers, they claimed bankruptcy. It was this whole thing. I was just wondering, how do you guys deal with that? How would you guys deal with that on your end?
So, first of all, I'm really sorry to hear that experience, and this may not be the right time to say it, but our product actually prevents that, right? Because it's a cashless deposit, all right? So for a downsizer segment that are probably making the last big buying decision of their life, trust of developers is a big thing. So 2 ways we mitigate that. Number one, if you're in New South Wales, there's a ICE certification, which the developers have ratings that they have to adhere to. So we only onboard if developers are legit and they are, their cash flow is a high quality product, cash flow is proven, all that kind of stuff. So we would mitigate that risk. Anybody that's on any property that's listed on our platform has been vetted, number one. Number two, if you were putting a cash deposit and a developer went bankrupt, it's really unfortunate, and I'd love to talk to you afterwards about to see if we can help in any way through our network. We might not be able to help ourselves, but I'm pretty sure we can have a talk about it. But if a downsizer puts let's say put $100,000 deposit down, that's almost definitely their life savings, right? If in your case that they put that down and the developer went bust, they would almost definitely lose that money. In our case, there's no deposit because we prove that the downsizer has the money and they will complete because we help them sell their existing dwelling nearer the time of the completion of the off the plan. So we de-risk the purchase of the off the plan, but we do actually have a financial instrument that underwrites and protects the developer as well. So in our case, cashless deposit, the cash deposit doesn't disappear. So I'm happy to have a chat with you afterwards if you just grab me.
That'd be great.
Well, thank you very much. That's all we have time for. So thank you so much. Thanks to the panel.
Thank you.
Thank you.